Week, Mastercard announced an acquisition of stablecoin infrastructure startup BVNK for up to $1.8 billion. It's the latest in mainstream finance's adoption of blockchain technology. Joining us right now is one of BVNK's backers, who's also betting on the growing link between blockchain and fintech. We haven't seen her in quite a while. Katie Haun is here, founder and CEO of a $2.5 billion firm, Haun Ventures. She's backed the likes of OpenAI, Anthropic, Coinbase, and so many others, including, as we just mentioned, BVNK. Good morning to you.
Good morning. It's good to see you again. I haven't been here since, I think, last June.
Oh, my goodness. So tell us about this deal, and then I really want to try to understand what you think is happening more broadly. And maybe this transaction is indicative of what's happening more broadly in sort of the convergence of legacy fin and the tech part of all of this.
Well, I think you just summed up well what's happening. What's happening is effectively an arms race in the global payment space. And you saw this week, as you said, Mastercard just acquired one of our portfolio companies, BVNK, for $1.8 billion. And this gets Mastercard squarely into the stablecoin space. By the way, Andrew, this was one of Mastercard's biggest acquisitions ever. And for us here, it's really validating because, as you know, I've been on this show many times talking about stablecoins over the years. We as a fund have been investing in it for years. And that's because we saw stables as a key innovation. I mean, you think you can transfer a digital dollar globally, instantly, anywhere in the world, really seamlessly and frictionlessly. And we think that's a really important innovation. And that's why you've seen incumbents, not just like Mastercard this week, get into stables. You also saw last year Stripe acquired another of our portfolio companies, Bridge, for $1 billion. Right. And I think it's easy to see why this space is $12.5 trillion of volume already. And we believe that this will only increase in an age of AI.
So it absolutely feels like it's going in that direction. The question that I would have about all of this is whether stablecoins ultimately become commodified. And maybe there's so much room between now and commodified that it doesn't matter as an investor. But I'm curious how you think about that, because if everybody has their own version of a stablecoin, what that ultimately means.
Right. Well, look, there are many currencies in the world, right? But then there are a few dominant currencies in the world. And we see the same thing playing out in the stablecoin space ultimately. And just because something is inevitable, I always say, doesn't make it imminent. But we really see with the rise of AI systems and things that I'll call agentic finance, we really see this trend continuing with stablecoins. These are fundamentally new rails, purpose-built for this new era in tech.
When you think about what's happening in crypto right now, in the blockchain, obviously this clarity bill that's not so cool. There's no clarity on clarity. What are you thinking ultimately happens between this massive fight between the crypto industry, and of course you were on the board of Coinbase, and the banking industry, which is what this is really all about?
Right. So actually, it's not true that there's no clarity. And let me tell you why. Just this week, I don't know if you saw, but the CFTC and the SEC came together to release joint interpretive guidance on the age-old question in the crypto industry, and that is that the courts were starting to weigh in on, and that is, what is a security and what is a commodity? So that happened this week, and I think a lot of people. We had Paul
Atkins on; he talked about it, but that
right.
we still don't have a bill. We still don't have real clarity on whether crypto firms can effectively offer either effectively the equivalent of interest or loyalty points or other kinds of things like that.
I'm hearing that there's a compromise in the works in the Senate Banking Committee, and I'm hearing that compromise is going to be announced as early as today. I'm cautiously optimistic. Obviously, we don't know for sure if that will happen. To me, the bigger question is not whether a compromise will be reached between the financial institutions, the banks, and the companies like Coinbase over rewards. And that is, for your viewers, by the way, whether or not essentially some form of yield can be paid on rewards on stablecoin deposits, which the banks have resisted. And I think is better for consumers. But to me, the big question on the Clarity Act is Congress going to get a bill to the floor on time to vote? Although there's still 7 months to go until midterm elections, the reality is there's only 3 working months that Congress has, if you can believe it. And so I think they need to move very deliberately after Easter recess to get this bill to the floor. But again, I'm cautiously optimistic, and we did have the Genius Act passed. But we'll wait and see. And we should have more news today on the compromise.
Thank you. Maybe you've broken the news right here. I hope you're right. Separately, and just to jump around to a lot of different topics.
I was cautiously optimistic, but yes, okay.
Well, we can cross our fingers. My question for you goes back to then AI. You have stakes in Anthropic and OpenAI. You also, by the way, used to work in government, and so I wanted to get your take on how you evaluate what is going on with this Pentagon situation, supply chain risk conversation, and the transaction that OpenAI has made with the Pentagon and the transaction that Anthropic has not.
Well, look, let's back up and just first talk about blockchain and AI and agentic finance. And I think we can all agree, and there are a lot of legal issues involved in that area as well. I think we can all agree that agents will be doing more things that humans do now. And one of the things that humans do now is they transact, and they make payments, and they exchange value with each other. And we think it's pretty inevitable that over time, computers are going, or more particularly agents, are going to be doing that on our behalf. And if you think that agents and computers are going to use the same payment systems that humans use, I think that's wrong over time. I think that agents are going to want to transact 24/7, instant settlement globally. And right now, if you think about how humans progressed from using checks to credit cards, and now actually not even credit cards as much as credit cards on their iPhone, we think that also agents will be using some of these new systems. So I think that's where AI comes in. And I should just note that our fund is not an investor in Anthropic or OpenAI, and I'm glad you listed that those were personal investments. Our fund is really focused at Haun Ventures. We've been investing in the future of finance, and that new frontier, of course, includes crypto, but it also includes things like tokenization. I don't know if I'm sure you did break the news that NASDAQ, I think, got SEC approval to offer tokenized securities. Robinhood is leaning into this. So it includes tokenization, these new rails I've been talking about that are open 24/7, and things like agentic finance and prediction markets. So we could talk another time, I think, about all of the litigation. And I think there's a lot of it, and I think there's a lot more to come. And by the way, same with prediction markets, with all these new frontier technologies. And I think that's why my background as a government litigator is actually particularly relevant to some of these companies.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.